The U.S. real estate market signals have been gradually building over the past couple months now. Home sellers are starting to ease back into the market. New listings each week are finally exceeding the levels of a year ago. As a result, we're starting to see slightly more available supply of homes on the market. This is an expansion of the market from an incredibly restricted levels last year. It is a positive development. The longer we stay with mortgage rates higher, the more inventory will build closer to where it used to be. Each year, we'll have 5 million more people who don't have the crazy low rates that they want to hold on to forever. Mortgage rates are higher than they were a year ago and higher than they were a month ago, actually. Higher rates means more inventory. If mortgage rates fell into the fives, for example, this spring, you should expect to see available inventory decline as demand picks up rapidly. But as of right now, rates are holding in the upper sixes and inventory is building slowly. It is important to keep in mind that home sales are climbing with inventory. As supply comes to market, that's lifting one of the restrictions that kept the home sales so low last year. The number of homes for sale and the number that are being sold are both climbing into 2024 over last year. At Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the founder of Altos Research, and let's look at the details of the U.S. real estate market as of the middle of January 2024. There are just over 505,000 single-family homes on the market across the U.S. now. That's a 1.2% increase over last week and nearly 7% more than last year at this time. So inventory ticked up this week. Each week recently, the gap between this year and last year has been widening. This week, the supply of active inventory gained over 6,000 homes. That would have been a big week any time last year. These are the signals that point to growing inventory of homes on the market all spring. In this inventory chart, every line is a year. Each line is a year. At the left side of the chart, you can see that the 2024 line is just starting. Each week, it's pulling a little ahead of last year. There is no signal of any flood of inventory, of any flood of sellers. It's not spiking, but it certainly looks like 2024 will have easier conditions for buyers than last year. This looks like a persistent trend. If you look closely at the bright red line last year's curve, you'll see it ticked up this second week of January before declining all the way into like May with falling mortgage rates. This year, rates are higher than they were a year ago. And while they're off their peak from November, mortgage rates are actually climbed a little in the last month or so in the upper sixes. And as a result, inventory is building. Even if inventory ticks down next week, which it could, it looks like it'll be a smaller move down than last year. And so the year-over-year percentage gain will continue to widen. We've updated the week-by-week forecast of inventory levels through the full year of 2024. This week, Thursday, we'll have our hour-long webinar where we dive into all the signals we can see for the coming year. We'll share this chart with the inventory forecast extended for the rest of the year. So you'll be able to see just how much housing supply to expect. We'll also have the time in that webinar to look into the local markets, which are behaving very differently. Some local markets have more inventory, a lot more inventory compared to last year, while some still have fewer homes available to purchase. So this Thursday, January 18 at 10 a.m. Pacific, that's where we'll discuss it. There's a link in the description below to register for that webinar. These webinars are very popular. They're limited to 1,000 attendees, and we have way more than that who want to join us each month. So you can still reserve your spot. Click on the registration link in the description below, and then we'll see you promptly at 10 a.m. Thursday Pacific time. Inventory is building now because we have slightly more sellers each week. The market had about 49,000 new listings this week. Of those, 9,000 are already in contract, that leaving 40,000 listings to add to the market, which is about a 5% increase versus last year. The defining characteristic of the 2023 housing market was that sellers sat on the sidelines and waited. It sure feels like fewer are waiting now. You can start to see it in the when we chart the new listings volume each week all year long. That's what we're doing here. The gray lines are the previous year, so you can see how many sellers we normally have. The light red line in this chart was lower. That's last year, and it was lower than all the previous years. Fewer sellers in 2023. However, by this last November, the trend started easing just a little bit. The bright red line started climbing over 2022. And so that trend is what continues into January. It now sure looks like we'll have more sellers each week than we did in 2023, all year long. And you can already see it at the left end of the chart here. The dark red line is this year starting out higher. It also shows us that we still have fewer sellers than we used to get. So in recent years, you could expect 50 or 60,000 weekly new listings as the year started. But I don't see any sign of reaching those old level normals anytime soon. What we're observing is the market expanding just a bit, especially if rates stay higher for longer. Inventory will continue to build like this. The other side of the equation to keep watch on is the purchase side. So I've called this a supply-constrained market. So as the inventory shortage eases just a bit, we should see more transactions happening. And sure enough, that's what we're seeing. There continue to be more new contracts each week than last year at this time. The pace of home sales is growing. It's not a ton, but it's not a boom, but the market is growing. I'm fairly confident that these trends are durable for the season. This sales growth has been slow and consistent for several weeks now, but it is important to keep watch. Because if inventory is growing and, for example, the sales rate were falling, that would be a very different message that the market is sending us. And so we're going to be vigilant and watch for that trend right here on this chart. In this chart, the height of each bar is the total number of single-family homes in contract in a given week. This week there are 251,000 single-family homes in contract. That's 5% more sales than last year at this time. The light portion of the bar are the new contracts in a given week. These are the new purchase offers that have new contracts pending. The new contracts also came in 5% more than the same week a year ago, 42,000 new contracts pending this week. The sales rate should pick up each week for several more months now with the spring home buying season. While it's a little risky to judge any single week as a trend, maybe we're seeing that sales growth momentum slow a little bit. Maybe. In last week's video, I shared that it looks like about 15% home sales growth for 2024. So at 5%, this week came in under that trajectory. Something to keep our eyes on. Probably not a trend, but it's always important. I wonder maybe if people have stalled a little bit, buyers have stalled a little bit, waiting for mortgage rates to resume falling. The 30-year fixed mortgage rate is still around 6.7%, which is stubbornly high and unchanged or even up a little bit in the last month or so now. When I talk about my expectations for the year, I base that on the assumption that rates stay roughly where they are right now. If rates drop dramatically, you'll see contracts pick up and inventory fall. Let's move on to the price signals. Remember that 2023, even though we had very few home sales, prices inched up a bit nationally. And we're looking at similar dynamics for 2024. When we look at the percentage of homes on the market that have taken a price cut from their original list price, we can use that to help see where the home sales prices will go for the full year. This leading indicator implies price stability or a little increase in prices, home prices for the year for the U.S. Price reductions continue to decline right now with the new inventory after the first of the year. 32.2% of the homes on the market have had a price cut. That's right in the middle of the normal range, and it's exactly how you'd expect a balanced real estate market to act in January. This implies slight home price improvement, home price strength in general for the next few months, slight. If rates fall from here into the fives, we'll watch demand pick up and we'll immediately see fewer sellers need to cut their asking prices. In this chart, every line is a year. You can see the normal curve. Fewer price cuts in the spring with fresh inventory and most buyers, and then later in the year, the price cuts accelerate. Last year in January, the red line showed us that we had an improving market all the way into May. What we're looking for here now is any change in the current signals for home prices. If, for example, inventory climbs more rapidly and sales doesn't climb, then we'll see the sellers feel it and we'll see them cut their prices. As of right now, the signs for the future home prices are reasonably solid, and that's what we're keeping our eyes out for. In fact, the median price of single-family homes in the U.S. is now just a hair under $420,000. Home prices ticked up almost 0.5% this week, and the median price of single-family homes in the U.S. right now is 3% higher than last year at this time. In this market where supply and demand is pretty balanced, home prices are not going to skyrocket, of course, but there is no sign of prices dropping either. As inventory grows and sales rate grows, prices are reliably ticking up each week as well. And that trend hasn't changed recently. The median price of the newly listed homes is $389,900 this week. That corrected back down from last week's big jump. There's some noise after the New Year's holiday, but we should see the bright red line here bounce higher for the spring, before peaking in May. In January, I love to watch the slope of the bright red line. This is the week that the sellers and the listing agents are telling us exactly what they see in their local markets. When demand is aggressive, like it was in January 22, you could see how quickly each week the sellers were pushing their asking prices a bit higher. The bright red line jumps quickly. Last year, demand was much more subdued, and the price of the new listings after the first of the year didn't grow nearly as quickly. Because the country is still faced with affordability challenges, it's really hard to see any force that would push home prices dramatically higher this year. We should be grateful that the spring market that is expanding with more supply and more sales for more people than in 2023, even as prices are staying mostly stable to the upside a little bit. If you need to help buyers and sellers see the actual data to understand perhaps that maybe they're going to see more opportunity as buyers this spring, or if they're sellers, they may see more competition. People need to help understanding the fast-changing market, and they need to hear it from you. So go to altosresearch.com and just book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us. Click that, and let's get started. See you Thursday, and then again next week.